No joke, this is the only question I'm getting today. Will the toy trucks from Hess continue to be available at Christmas time?
Yeah, so not to hold you in suspense, yes, they will.
Okay.
In fact, next year is going to be the 60th anniversary of the Hess toy truck. We sell them on the internet, and we intend to continue selling them.
So I got to ask, I didn't know about these trucks beforehand. Was it part of the deal? Is there some line in the deal about the trucks? Was it part of the negotiation?
Let me put it this way. Mike and I came to a mutually agreeable understanding to continue selling the trucks.
That's a yes. That is an actual yes from two CEOs. So Mike, walk us through actually how this deal did come about. We heard earlier that you guys have been talking for a couple years, and I'm really curious as to why now is the right time to make this happen.
Well, we have been talking for a while. There's a terrific alignment between the two companies, our portfolios, the cultures of the company, and the people. And particularly as Hess's development in Guyana has continued to be de-risked and progress, what was at one point in time kind of a wider gap in valuation has narrowed. And the stocks of the two companies have traded into a range where it works for both of us. And so now's the time that those circumstances have come together. But for quite some time, we've seen the fit and the appeal and been working on this.
Which, I'm just so curious, John, because on the call, it seemed like some analysts were intimating that, hey, did you get a high enough price?
Sure.
And also, you're doing things very well in Guyana, and I appreciate it's also the Bakken, et cetera, but we just focus on Guyana. You guys are already crushing it. Like, why do you need Chevron?
Yeah, well, it's a great question. I think some context would be important.
Okay.
Our stock for the last 5 years was the #1 total shareholder return in the industry, whether it's independent or whether it's major oil company. Last year, our stock went up 94%, #2 on the S&P. So we've already created a lot of value. At the same time, now that the pricing got in a range that would work both for Chevron and work for Hess, we think we came up with a win-win. Hess brings Chevron growth in resource, growth in production, growth in cash flow. Chevron brings Hess financial strength in terms of a diversity of world-class assets, in terms of sterling balance sheet, and in terms of industry-leading cash returns. And when you put the two together, you create the premier oil and gas company positioned for the energy transition.
Mike, what I'm hearing here is that this is a great fit. Could you do this on your own? Could you build what Hess has built from the ground up? Is it easier to buy than build right now?
Well, look, this is about long-term growth and long-term value, which is what we're always seeking. Hess has a unique portfolio that actually strengthens our portfolio with some things we're always trying to do. We're always out exploring. We're looking for new finds. Guyana's the biggest discovery in more than a decade in this industry. It's just a unique and compelling asset. And so it would be difficult for us to do on our own. We continue to explore. We'll continue. Everybody in our industry is looking for these things. But this was a great opportunity for us to join a partnership that's done a terrific job in developing this asset. But also, the other assets in the Hess portfolio are ones that will be additive for us as well. The Bakken, the Deepwater Gulf of Mexico, Southeast Asia. And so it's a very nice fit at a portfolio level, nice fit at a culture level, and we're going to create more value for shareholders.
Yeah, so let's get to the Bakken part too. So how important is the Bakken going to be in your portfolio? Because clearly the rhetoric after this deal was it's all about Guyana, right? Like it's deep water, it's amazing, the costs are so low, it's going to be awesome. Well, where's the Bakken in this?
Well, the Bakken's very important. We've got a big shale business already, right? With positions in the Permian, the DJ Basin, we're the largest producer now. Hess has been doing a great job in the Bakken for a long time. That's really where this all began. And so for us, it's about adding another scaled position in shale that is performing very well. We can bring whatever expertise we may have. We're working on technologies to improve recovery and learn from our new colleagues at Hess who are doing things in a basin. When we went to the DJ, we learned some things that we hadn't been doing in the Permian that made us better. I'm certain the same thing will happen here. So it's absolutely an important part of the transaction.
John, you talked about the price narrowing. You started off far apart, bid-ask kind of widespread. It came in. What brought it in? What factors allowed you to bring that understanding between the two firms together?
Well, the gap in shareholders recognizing our value, we weren't getting credit for this 11 billion barrels of oil equivalent resource that we had in Guyana.
So the market narrowed the gap for you?
Yes. Exactly. And then it got to the point where it got to the win zone for Mike and the win zone for us. And, you also got to remember, this is a stock for stock deal. So some people would say, well, geez, you're selling it. And we're not selling for cash. We're staying invested. Our family is going to be a long-term shareholder of Chevron, and we're happy about it. And we think there's going to be a lot of upside to come, in addition to which our own dividend is going to go from $1.75 a share to $6 a share, and next year it's $6.50 a share. So you're getting the benefit of growth in asset value with growth in cash returns. And that's a magic formula. And I think it'll be the best oil company to own and actually the best oil company to work for.
I have to say, you guys seem to get along quite well. You don't always see that with the oil mergers. How did you guys first start this conversation, like years ago? What was that? Was it like you guys at a CERAWeek dinner, like chatting? What was it like?
It was actually at a dinner, but it wasn't at CERAWeek. It was at another location. But look, John and I have been friends. We've been great admirers of Hess. I've been a great admirer of John for many, many years. And it was a very natural evolution, I think, as we're both looking to improve our businesses and create value for our shareholders. We had a nice conversation. As John said, in the beginning, the market wasn't recognizing the potential in the Guyana asset in particular. As that's been de-risked, and as we get closer and closer to this cash flow inflection, we really did move into this zone. But it's been a very friendly discussion along the way.
It seems like it.
And by the way, you haven't mentioned yet, but we look forward to John joining Chevron's board of directors and continuing to exert influence over the strategy of our company. And he's got key relationships with partners and governments around the world that we'll continue to benefit from.
So,
and also, if I can, Mike and I have known each other through the industry for years. I have a lot of respect for him. I think he's the best CEO in the energy industry, one of the best in the United States. So have a lot of respect for him. So
it wasn't succession things for Hess. It was not a succession.
No, we were actually prepared to continue as an independent. That's what our history is. We're celebrating our 90th anniversary as a company this year. We have the best hand in the business, the best growth portfolio in the business, and we're just executing the strategy to go forward. But Chevron brings forward that diverse portfolio of assets, strong balance sheet, as well as high cash returns. And when you put those strengths together with our growth strengths, you really create, I'd say, the premier energy company that's out there.
Mike, there aren't many assets like Hess out there, but there are a lot of assets out there. And I hate to sort of ask this question on a day when you're doing a massive deal, but are you done yet? Is this an industry that is going to continue to consolidate? We've just seen two really big deals in as many weeks. That can't be by accident.
Well, I can only speak to our deal, and this is the right deal for us. We actually did another deal earlier this year. So for us, integrating is very important when you do a transaction. You actually, to create value, you need to bring the companies together, the people. You need to continue to operate safely and deliver to your customers. And so our focus for the next several months, if not longer, is really about execution and executing well. In the long of time, our industry has grown through organic and inorganic activity over time. Our company has done the same, and I do think, in the future there potentially could be other things, but that's not here and now. That's further down the road for sure.
Do you guys think that oil's going to stay volatile and trade above 100, 150? I'm going to go to John because I feel like maybe you can talk more about what you really think the oil price is going to be now.
Look, in the short term, there's a direct correlation between world oil inventories and price. World inventories are drawing at about 1 million barrels a day this quarter. As you get to next year, we think demand's going to grow maybe 1.5 million barrels a day, barring a worldwide recession. Hopefully we don't get there. I know there are all kinds of geopolitical events, be it in the Ukraine or be it in the Levant, that are going on right now, tragic events. But taking that factor out, we think the market's going to be tight, and the supply side of the equation is going to have to run fast to keep up with the demand side. Shale's no longer the swing producer. Saudi Arabia and OPEC are. They're going to keep the market stabilized. But I think the real issue for the world to understand is that oil and gas are needed for decades. They're key to an affordable, just, and secure energy transition. I think the conflict in Ukraine put a shining light on energy security. And at the end of the day, oil and gas are a strategic industry for our country in terms of jobs, 12 million jobs, more than automotive, direct and indirect. In terms of electricity costs, 2 to 3 times less than they are in Europe and most of Asia, and ultimately national security. We're energy independent. Europe buys 70% of their oil. China buys 70% of their oil. So we have a real strength. We should be leaning into it for economic prosperity, but also national security.
Mike, isn't that the real message from this deal? You could have done a deal in the energy transition space. You didn't. You did this deal. Isn't the message coming from this that the industry is now at a point where it is going to invest in the future, that the energy transition story is of interest, but it's not the only area of interest, that this is an industry that the world still needs to rely on? You could have done other deals. You did this one. Isn't that the message that comes from this?
Well, I'd put it a little differently, guys. We have done other deals.
Yep.
Earlier this quarter, we closed on the largest green hydrogen manufacturing and storage facility that will be built in the United States. We're the second largest renewable fuels producer in the U.S., and we're expanding our production capacity there. So we are doing the other deals. But I think the point that John's making is really important. We need to continue to invest in the energy system that supplies the world today, even as we're investing in one that can integrate into that and help reduce the carbon intensity tomorrow. We believe the future of energy is lower carbon. We believe these new technologies will play a greater role, and we continue to invest. So I don't think you should read this as a lack of commitment to the energy transition, but we need to invest in what the world runs on today. This makes us a stronger producer. It takes two great American companies and brings them together, which is good for national security and economic security. And we're committed, both of our companies are committed to a lower carbon energy system.
Mike, speaking of, are you able to pump more in Venezuela right now? And will you be investing more in Venezuela because of some sanction relief?
So we have seen production in our ventures in Venezuela increase this year from around 50,000 barrels a day when the year began to something between 100 and 150 today, and we've been gradually seeing that come up. We've recently seen some further actions by the U.S. to reduce some of the sanctions on Venezuela. This is a slow moving story.
Is it sustainable though? Like if you increase to 150, can you hold it there?
I think we can, as long as we can operate the way we're operating today, and some of these constraints have been taken off of us. And but the Venezuelan industry has been under pressure for a variety of reasons for the last couple of decades, and turning that around will take time and it will take investment. So I wouldn't expect this to be something that goes up dramatically, but yes, we've seen some steady improvement, and we're looking to try to continue that.